All right. Good morning, traders. Happy Saturday, December 13th. It is absolutely crazy to me that we are almost halfway through December. That is insane. 2025 went so fast. I hope you're doing well. Um, in your trading, in your life. Christmas is quickly approaching. I hope you've gotten your Christmas shopping done and can enjoy this holiday season. It's been a great December so far. Thanks for joining me live. I always love this session. Good morning, Bill, Mike, Deepak, JK. Good morning to all of you. If you can do me a favor, hit the like button. Takes a couple seconds. Hi, Karen. Good morning. Takes a couple of seconds, but it helps me out on the YouTube algorithm to get these swing trade sessions pushed out to traders that are looking for actionable trade ideas. Yeah, Drag Dad, I do 99% of my shopping on Amazon as well. I am not a shopper. I know that might sound crazy being a woman, but yuck, I do not like going into stores and shopping. If I am going into a store, I have a list. I go and get exactly what's on my list and then I walk out the door. I do not enjoy browsing and all of that. Just ugh, not my thing. That's why I do not go shopping with my mom. She is a shopper. She can go for three things and be gone for 2 hours shopping. No, thank you. All right, guys, let's get started. I'm going to start out by looking at SPX, the cash settled S&P 500. It is what I mainly day trade is SPX and XSP. So I like to pay close attention to this SPX chart, and I'm going to start on the weekly time frame to get an idea of where the major support and resistance are. Now, you know my favorite candlestick structure is the inside candle. And then we never know until, in this case, the end of next week, if this could potentially be an inside and up or an inside and down. So at the next live session next Saturday, we'll have a better idea. Did we create an inside and up? That would be if next week's candle closes above 68.70, or an inside and down if next week's candle closes below 68.12. So, important week going into it, just because this past week we just finished trading closed inside the body of the previous candle, giving us that inside candle formation here on the weekly chart. So 68.70 and 68.12 on SPX, important levels for me this week. As far as the first major support goes below 68.12, that's going to be 67.61 right here. This is the 9 EMA on the weekly chart. So a pullback to that 9 EMA typically leads to a bounce. Now, back here about a month ago, we pulled all the way back into the center of this EMA cloud, which would be right at near the 22 EMA. But for the most part, the 9 EMA is where we get that bounce. You can see if I just scroll back here, we got a nice bounce off the 9 EMA on the weekly. And scrolling back even further, well, I mean, we almost, I would call that a test here back in June. Another nice bounce off the 9 EMA, nice bounce off 9 EMA, nice bounce off 9 EMA. And then this little, you remember trading November? I do. It was, I didn't enjoy trading November at all because we just sat there, consolidated, and then we had that down move to test that center EMA. But my point is that a test of the 9 EMA here on the weekly chart usually gives us a nice bounce and continuation uh, to the upside. So 67.61 would be that next area of support that I am looking at here on the weekly chart. Now, all-time high is going to be the area of resistance if we get up and above 68.70. That's only about 50 points. So if we create an inside and up here, about 50 points above is the resistance. That would be the all-time high. We could potentially, if I run a Fibonacci extension of this big candle, this run, now a couple of weeks of consolidating up here. But if I run this from that candle's move up to the all-time high, that will give me some key Fibonacci extension targets. Now I am targeting up and above the all-time high. I want to target the round number of 7,000. And then above there, you're looking at 70, 30, 7,100 and 7,200. But above, I'm going to just set for the big round number of 7,000 there. So there's some targets up and above that 68.70 that I will be looking at through the end of the year. And here is our major support for next week if we do go inside and down. Now let's take a look at the daily chart. Not a lot is going to be different, honestly, because we just didn't do a lot last week. But let's look at this from a weekly edge perspective, okay? The upper weekly edge for next week, this gives us a trading range. From the lower weekly edge to the upper weekly edge is the range I'm looking to trade for just Monday through Friday next week. And that's going to be 68.12 by 68.91. There's not much of a range there considering on average a week, the SPX moves about 170 points. The reason being is last week was just very choppy until we got that big 100-point move down yesterday. But it just really took out the move that we had move up that we had on Thursday. So this is the trading range for next week on SPX. If we get below this lower weekly edge, the next area of support is going to be the bottom of this EMA cloud right here at 67.58. And then below there is going to be 67.02. And finally, back to this buy zone on the daily chart, 66.36 by 65.21. Those are some levels and some targets for the downside on the way back to that buy zone right there. Now, if we get up and above this upper weekly edge, the top of this trading range, of course, our next target is the all-time high. But above there, the even number of 7,000 would be my next target up and above. Looking at the 4-hour chart, you're going to see that big 4-hour candle from last week. That's actually my day trading chart there. Let me get it on the 4-hour. You're going to see the big candle from last week. And what I'm going to do is I'm going to take off all drawings and I want to draw this out for you. So I like to use a 4-hour chart for trades I'm going to be in for a week. So these would be if I'm putting on a swing trade for like 2 days to 5 days. All right. The upper edge, of course, is my target to the upside, then the 69.20 all-time high up here. This is going to create a zone for me, and it would be a sell zone. So if you are looking for a place to potentially go short, if we get a big pop on Monday, let's say, and price pops up into that upper weekly edge by the all-time high, this would be the zone that I would consider putting on some put positions for a target down to this lower weekly edge. And then I want to look left and find the 4-hour inside and up candlestick structure. Remember not last week, but the week before when we did absolutely nothing but chop all week? That's this price action that you see right in here. So this is going to give me my buy zone for trades that I would look to be in for 2 to 5 days. So now that I have those zoned out, for short-term swing trades, SPX 6813, 6783 is calls. I would be looking to trade calls. And 6892 to 6920, I would be looking to trade puts. Where could we trim along the way in between these two zones? You can just use the halfway point. So because price is so very choppy right now, if I just measure halfway in between these zones, this is kind of the over and under for the week. So if I'm short from here, my first target is going to be 68.53, and then my ultimate target is going to be 68.13. Deepak, what is the logic behind selecting this here or here? It's the upper weekly edge, Deepak. Always, I mean, as I rely on these trendy edges, right? And upper edges represent a playing field of supply or a sell zone, and lower edges represent a playing field of demand or a buy zone. What about the gap all the way down here, Mike? Yeah, if we take out 68.73, then yeah, we're looking at a gap fill down to 65. But I want to just trade the formation, and if this 67.83, the low from a couple of weeks ago, if that's taken out, then I have to concentrate down lower than that, right? I'm not going to sit in a swing trade for like next Friday's expiration only to watch price come all the way back down to 6,700, because my option would be completely worthless at that point and I would be running out of time. All right. All right. So that's my sell zone for trading next week. This is my buy zone for trading next week. on SPX, and I have an idea of what I'm looking for. If this coming up a week is more chop that we have been experiencing for the last couple of weeks, then I would expect price to just close in between 68.12 and 68.70. All right. Good morning, DMC. Good to see you. All right. Let's see. Oh, good morning, James. I missed your good morning. And Bill, I don't know. Yeah, I got you. So good morning to all of you. All right. So now let's talk about what is on my bullish watch list for this upcoming week. I use koifin.com to create a watch list. I'm looking for relative strength of the different sectors across the market. I look at year to date, what are the top 5 performing sectors. Then I look at quarter to date, since this quarter is almost over. And then looking back over the last month and the last week. I will tell you the one that sticks out. Well, there's two that really stick out because they are on 3 out of 4 or 4 out of 4, and that is GDX, which is gold miners. So gold would also be a highly outperforming area of the market, right? And then XME, which is metals and mining. Those kind of go hand in hand. You got some crossover with companies that trade within both of those sectors. But GDX and XME, they are strong performing across all time frame look backs. Another sector that is on 3 out of the 4 of those time frames for relative strength is jets, the airline sector. So jets names, GDX names, XME names, those are all on my watch list. Other than that, SMH, semiconductors, they are strong. They're the third strongest sector over 2025, but more recently, such as this quarter, this month, and last week, it is not on the list. I do have one name on my bullish watch list, and that is NVIDIA. So I'm going to give you my trade idea for NVIDIA to potentially play a dip buy back up into 185, 195, and 205. But other than NVIDIA, I do not have any semiconductor names on my watch list for next week because they have lost their relative strength across some of the smaller time frames. All right, same with tech. I've got a couple of names on my list like Apple and Cisco, but not a big focus on tech because it is lagging. Even though over 2025 it is the fourth best performing sector, more recently, it has shown weakness, so I don't want to focus on swing trades there unless it would be in Apple, which I have a buy zone. In the trendy room, we played Apple from my buy zone last week. And I actually intended for it to be a swing trade, but got in it and out of it all in the same day because it bounced so hard off of my level that it came up into the golden Fibonacci of the move, and I went ahead and took the win. I think it was up 35%. Took the win there. Other than that, I got a couple of healthcare names on. Healthcare has shown strength over the last quarter, but it's eased off some. But there are some outperforming names in that area, and so I have some healthcare on there. And then the other one that's kind of off is oil services. I have a couple of oil services names. OIH is actually the leading sector so far for this quarter. And then it's also in the top 5 over the last month. I put IWM on the watch list, the Russell with the Fed rate cut of a quarter of a point. Small caps love that. Financials love that. So I have some financial name that I'm watching as well as IWM that created new all-time highs. I don't buy at highs. I'm not going long at highs. I am a dip buyer. And so I'm going to give you the dip or level or the buy zone that I would be interested in swing trading IWM from. So all that to say, these are the tickers that I chose from those outperforming sectors to focus on and create alerts on. I'm going to give you the lowdown on buy zones and sell zones for these names. And that way you'll know what my trading plan looks like. First up is Alcoa. Alcoa has been on my list now for a couple of weeks. I just haven't gotten a pullback. This was the zone I was looking to trade from last week, and I just haven't gotten that pullback to 41.72. Well, since I created this chart, we have actually made new all-time highs or new highs on Alcoa, and it is going to move my buy zone up with it. Okay, so now that buy zone would be right here, and I need to, because I have a lower weekly edge as well as inside and up candle formation even higher, I'm going to move this alert to that lower weekly edge now. And I'm going to move my buy zone up as well. I want to have that 618 in there, that golden Fibonacci of this move, but I need to include the inside and up and the lower weekly edge. So now my buy zone is going to look like this. For Alcoa, I would be looking for a dip buy somewhere around 43.35 to $40.09. That is a risk of about $2.75, and then the reward is up here at about $4.15. Now, above that, I can come to my weekly chart and see that I have a weekly sell zone at 54 to 57.88 on Alcoa. So right there is that sell zone. My buy, a trim, and a target for Alcoa. All right. This trade, my plan is wrong if we get a daily candle close below that golden Fibonacci level on Alcoa, and I would exit my trade. Target. Now, how long should I be in this trade if I am targeting a move of $11? I can go and look at the monthly ATR is 7.5. That means that if I am targeting 54, I need to give myself 2 months to expiration to get there. So I would be choosing the February expiration date on Alcoa to hit that ultimate target zone. So I'm going to write that on a scratch pad just so I remember to use February's expiration. All right. All right. Let's look at American Airlines. I mentioned that American or Jets, the Jets airline ETF is a relatively strong as of late. And you can see here on American that we came right into a sell zone on this daily chart. It has some work to do. Bulls have some work to do. I'm not going to buy up here at the $15 level because I'm right at resistance. I do have an inside and up candle formation down here at 1442 by if I use just the bull channel here, that would not be that much risk. What I'm going to do is I'm actually going to come down to this 618. Okay, this is the buy the dip zone. The problem with American Airlines and trading this plan is you would have a dollar risk and your reward is less than a dollar. So it's just not a good enough risk to reward for me to put my money there right now. I need American Airlines to either get up and above this first sell zone so that I can target those higher prices up there, or I need a deeper pullback into this zone. And by deeper, I mean down here near 1384, where you have the daily 21 and the 50 fib. If I were to trade from this part of the zone, then my risk would only be about 50 cents and the reward would be a dollar something. So that is a better risk to reward. So I'm going to keep it on the chart and I'm actually going to put my alert up there. So even though I have the inside and up right here, it's just not a good enough risk to reward to take the trade unless it came deeper into that zone. All right. Let's talk about Apple. I said I would give you my plan for Apple. This is a day that in the trendy room at Simpler Trading, we caught this dip buy right here. And you can see where the candle closed. This is where I got out. So we traded this from 273, 274 back up to 277 and a half, all in a matter of a hour or two. But I still like the idea of buying Apple. It is relatively stronger than the rest of the tech names. And I have my alert back at where we got in on Thursday, I believe. This was Thursday. So the plan would be to trade this zone here, and my targets would be the upper monthly and weekly edge that are stacking up together. So about 279 to 281. That would be a target, then 284, and finally back up at all-time highs, 288. All right. So that is the plan for Apple. Now, Ally, uh, financials, banks, all of that, they have been doing well. And Ally is definitely looking nice here on the daily, but on the weekly, we are trying to get up and over that swing high. We wicked above it yesterday or this week, but we couldn't close above there. Then if I look further off to the left and find the weekly sell zone above this swing high right here, it's going to come in this candlestick structure up in here. All right. So the all-time high, I'm going to go ahead and put that on my chart. And I'm going to look and scan all of this mess that it just hung out near all-time high before it rolled over. And I'm going to get my inside and down right here because these candles all just traded inside the body of that one. But then we started the move back down based on that 49.19 level. You can see, and it was a long time down from there. So that's going to be my target zone for Ally going into a trade. But of course, that topping wick area where it stalled out this week, that is going to be a target on a pullback buy below there. I would trim and take some profits off back at that troubled area. Okay, so now let me go back to a daily chart. Now that I have the sell zone, I'm going to go back to the daily chart and I need more time. So I just come down here and I'm going to look at the 3 years back should get me the topping wick area, or you know what? I can use a weekly edge because it's going to be right about the same. So use that weekly edge right there. Now, lower weekly edge is a buy the dip. It's based on this inside and up right here. You also have an inside and up right here, and they're pretty close together. And it's got about $1.60 of risk trading this weekly edge, getting the daily 21 at the bottom of this zone to trade out of. And it also has a monthly edge in there. So I like this for a buy the dip opportunity because of the confluence. If I run some fibs on this rally on Ally, you'll see that's basically the bull channel, bottom of the bull channel, and includes the golden pocket. So I like that. All right, so that would be my buy zone on Ally. Then I need to trim this position up here at 45.74 and ultimately target 49.19 by 56.61. So that is the plan for me for Ally. I'm going to just create an alert, and that way, if price gets there, my computer will let me know that Ally has come into a potential buy zone. Now let's look at Barrick Gold. This is a gold miner name and one that I have had on my watch list now again for a couple of weeks. We did not come down into this inside and up and have since created a new inside and up candlestick structure. So what I'm going to do on this name is just move my alert up to this inside and up candlestick structure and plan to scale in to the name and give myself plenty of time. As far as targets go, it is right south of the sell zone that I've had on here. 44.73, 47.82, and 49.90. If I'm looking to buy a dip here at 40.80 to 39.46, that is $1.34 in risk. And first target's about $2.75. So I like the risk to reward. And then, of course, I have higher targets if Barrick keeps rolling and going. But If I buy this zone, if it breaks down below and closes below 39.46, then I would just exit that trade and be patient for a pullback to 37.54 to 34.97. So this is two different trades on the same chart. I would rather take a small loss on this idea than to ride it out and make my risk $6, right? $6 risk for $3 reward. That is not how I like to trade it. So that's the idea there for Barrick. It's actually two in possible trade ideas. And remember, I do wait for confirmation in a buy zone. So there is a possibility if this ends up being a falling knife, that this zone just gets erased off of my chart and I focus then on this zone. So just because it comes back to 40.80 doesn't mean that I'm automatically in. I go to smaller time frame charts and look for higher lows before engaging in the trade. But if the bottom of the zone is taken out, then I just remain patient waiting for the next zone. All right? So that would be the trade plan for Barrick. Now let's look at Bank of America. Bank of America is another name that I recently traded to the upside from this zone here, traded it up to the upper monthly edge. That thing got going. That's a beautiful rounding bottom. It has been up for 3 days now. So a pullback would, or just consolidation would not surprise me in Bank of America. Give the 9 EMA a chance to catch up with price. So I will remain patient on this name. I'm going to move my buy the dip up to the lower weekly edge here. All right. And you can see that's kind of the bottom of that rounding bottom, right? But this is inside and up candlestick structure. And then it's also, I need to adjust these Fibonacci's because it's going to make my zone more narrow. So move my zone up here and it's going to look like that. All right. So I like a Bank of America for a dip by around 53.51. The bottom of the zone would be give me about $1 of risk, and the reward is almost $2. So I like that. Okay. Now, I believe for sure that yep, okay, so it did create new all-time high there at 55.30. So I need to draw Fibonacci extensions. If I were trading BAC and using January's expiration, you got a monthly move of about $4 to $5. So that means I know that I want my upper targets to be about $5, right? So somewhere around 58. You could just simply use that ATR and put your target up here at 58. Or you can go back and look over the last month at the move, run your Fibonacci extension targets from there, and you can see that the 38.2 is going to give me about that $38. Then I'll just do the 100%. But I like to have that 61618, that extension target, also on the chart. So there are some higher targets for BAC above the current all-time high by the dip here. And then these are my targets to the upside. I have the alert there, so I'm good to go. Cleveland Cliffs, CLF. This is a metals and mining um, name, and XME has been strong across all time frames. And the reason why I chose Cleveland Cliff, it got up and above the daily cloud. It created a nice rounding bottom, giving me a good looking buy zone down here. Now it has relatively small moves. So it moves about $3 a month. So even though these targets look real close, you have to keep in mind the average true range of the name. But these are some further upside targets, and CLF is actually a name that I wouldn't mind trading all the way out to March. So if I'm thinking about, give me one second. Sorry about that. If I'm thinking about trading it all the way out to March, then I look at the weekly chart and look at the fact that we are 2 weeks inside, came down, tested the 9 EMA here on the weekly chart, and onwards and upwards to 1541 is a definite possibility. That means, remember I looked and it moves $3 to $4 a month. That would be where it could be in a month, and up here at this sell zone in 2 months. If I give myself out till March expiration, that is plenty of time. The in the monies or at the monies would be about $12. So it would be buying $12 calls and trading it out to March. If price were to get up to that target zone of $17 to $18, that's $5 above 12, right? So go up one, two, three, four, five, and that'll give you an idea of your potential profits all the way up there at that final target. But about $3 up is the first target. So $3, one, two, and three, you can see it has a pretty nice reward. So even though it's a small uh, name to trade, it does pay well when you hit those targets. And I like this for a potential V-shape recovery back up to this heavy resistance area here. So that's what I'm thinking for CLF. That would be March expiration. So a little longer time both on Alcoa and CLF. Most of the names that I would be trading or giving you trade plans for, I would choose January expiration, but some of these metals and mining names, I'm choosing a little bit longer time. All right, let's look at Cisco. I started a trade on Cisco this week in the trendy room with plans to add. Um, I I like Cisco. As far as tech goes, this thing is outperforming. It's been down 2 days. It came into a buy for me, and I'm wanting to play it back up to the 80 area and then 82. So just started the position with half allocation. We'll add another contract here and here if tech continues rolling over next week. But I wanted you to be aware of where my ads are at. And if you're not in the trade yet, then even starting a trade here at 76 and a half would give you good risk to reward back to the upside. Delta Airlines, another outperforming sector, the jets sector. If you look at Delta here, it created new all-time highs this week. That means I'm definitely waiting for a pullback. That pullback's going to come right here, and the weekly edge mid is inside of this zone. So I'm looking for a pullback to 67.70 by 65.12. That's about $2.50 of risk, and the reward is about $3. No, almost 4. So not bad risk to reward there. I do see that I would play this out to January or February as far as expiration goes. If I look at January, you can see that the at the money is going to be, I mean, it's so close to 70, I would call 70. So the at the money is going to be about $3 to $3.50. I would just not, I would use the at the money in this zone. So that would be the 67.50s or the 65s. Up to you, because this zone is both of those strikes, right? And depending on where I get in will determine if I use a 65 strike or 67.50. Then I'm wanting to play this back up to first target upper weekly edge, and then from there I would draw Fibonacci extensions of the move and get some more upside targets here because we are at all-time high on Delta. Now, if I look at it, would be playing it out for 1 month. 1 month it moves $9. If I'm buying here, $9. Okay. All right. Let's look at DuPont again. Nice move. I didn't get my entry. There's my alert still sitting down there. It's pulling back nicely, and it is almost at this lower weekly edge for this week, but we did not come back to this buy zone. It has not been tested. If I were to trade off this lower weekly edge on DuPont, I would only use like buy one contract, get my foot in the door. The reason why I'm okay with going ahead and starting the trade here is because of the inside and up, because of the daily cloud right there. But I would still save some allocation for down here. Now on DuPont, if I take a look at this weekly chart, all right, and look at where price is at right now, draw a Fibonacci extension off to the left and find where that weekly sell zone is at. And I got to go back a ways, but here's the all-time high. I'm going to go ahead and mark that. Well, maybe. All right. And then zoom in here and look at the candlestick structure. I mean, it's pretty obvious why we stalled at 41.83, honestly, because you can see the weekly sell zones. But price has been up there quite a few times. So what I'm going to do is I'm going to leave 41.83 as a target. I'm going to leave this all-time high as a target. And then I'm going to look 41.83 and 45.88. 4588. 4588 would be the next target. It's close enough. If price can get up and above 42.82. All right. So I'm going to remove this and just use these as targets. Upper weekly edge, then the top of that zone, and then right up near all-time high. Okay, that would be my plan for DuPont here. All right, now GDX, gold miners on fire. This thing is on fire in such a way that honestly, all the names inside of this sector, I can show you on the grid here. All the names inside of this sector are bullish, bullish, bullish. Here's the top names, and you can see it's green, 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 green. If I see something like that, I can just trade the sector itself as long as it has good liquidity. And GDX definitely has good liquidity, so I wouldn't have to worry about that. So that leads me to where would I look to buy the dip? This inside and gap up, a pullback to here is a buy the dip opportunity, but I'm going to create the zone here at 80.14. That is the lower weekly edge. And then I'm just going to use this gap fill idea, right? That if price comes down and fills this gap here, and I'm using the bottoming wick of that candle to create my buy zone, this is where I would look to buy a dip on GDX. Upper weekly edge is going to be a target. And then I'm going to use Fibonacci extensions to get further upside targets. So you're talking 90, 91, somewhere in there would be a first target. And then 94, that 618, and then that 100. So if I'm looking to trade this out to January's expiration, right? And oh, dadgummit. Sorry, guys. If I'm looking to trade this out to January's expiration, which would be a month, and I look at the monthly ATR, $8. From there to there is the expected monthly move. These would just be because gold and gold miners are on fire, right? But that's the realistic expected move for 1 month to expiration. Okay? And these are just extension targets above. So for $3.30 of risk, about $7 reward. That's a good risk to reward. I'm happy with that. Even taking a 1-for-1, you could do that as well. Okay, that would give you a target. If we pull back, give you a target up here at about 83.68. All right. So that would be the plan on GDX. As far as gold itself goes, this beautiful rounding bottom lines up with the lower weekly edge, and the bottom of that rounding bottom is going to be here. So if I use the lower weekly edge and the bottom, the lowest point of this rounding bottom would give me the buy zone on GLD. Then the upper weekly edge would be a target, and then the all-time high would be a target. So that's the buy zone for me on GLD going into next week. Google's a name I started a trade on yesterday on the dip, and it is a trade I'm still in. It expires December 19th. So what I plan to do is I got my foot in the door on the 310 calls on Google for next Friday. It's only half allocation for me. So what I'll do is I will use the PMZ on Monday or Tuesday if we set up, like, I got to use this as an example because I'm looking to go long above the PMZ, right? I would add to my full allocation if price gets above the PMZ, and then I would trim at the trendy edges and the previous given targets. And my foot's in the door because I wanted to take advantage of yesterday's big Google pullback, and it recovered about half of it. It still has some ways to go, but my targets are 315, 320, and then all-time high. I will use the PMZ this week if given the opportunity above the PMZ to go long, then I'm trimming at 315 and 320. If Google comes back and we don't take out 305.50, and we start rounding out and say we're below the PMZ, right? But it pulls back again to about 307. That's where I would just add, not using the PMZ, but using this week's lower weekly edge. I would add to full allocation there. My stop would still be a candle close below that 305, and then I'm playing it back up to targets. All right, that is that. Halliburton, this is a name I leap traded this year. But I believe from back in, I no, that isn't where I got in. Let's see. I started this thing sometime around in March. So that's a leap trade from last year. Uh, well, almost a year ago. But I also am watching it for a potential just swing trade into the rest of or into the first quarter of next year. All right. As far as where I would be looking to buy a dip, if I play edge to edge, which is absolutely reasonable on Halliburton, you have a monthly edge and lower weekly edge. It's a very, very tight risk zone based on the inside and up candlestick structure. I mean, very tight, like 35 cents. That is just way too tight. But if you wanted to use that as an initial entry, that is something I would be more interested in doing, or wait for this bigger zone down here to play it back up to the $30 level, and then above there I'm looking for $33. So just something I'm going to keep my eye on. That is for a trim for a leap position into uh, 2026 that I'm already in. But I'm going to go ahead and put an alert here just to let me know that Halliburton might be setting up for a trade. I would trade out into March 2026. All right. Yeah, JK, I am. Jon and I need to sit down and plan out how we're going to do that for our 2026 long-term type position plans and projections. But yes, we are going to do a session about that. Hecla, another gold name. If I'm trading GDX, I'm not going to set up a trade also in Hecla. My buy zone 1684, 1549, and my targets are 1925 by 2038 and then 2105. Sorry guys, I'm speeding this up just a tad here. Daily buy zone on IWM 251.09 to 248.54. Looking to buy a dip on small caps down here, playing it back up to 257, 258. J&J's buy zone right down here, 202.54 to 199, playing it back up to 210 and then 213.34 extension target and 217.07. Love Southwest Airlines buy zone 38.20 by 31 or 35.31, playing it up to 41.66, 44 and a half, and 47.92. Merck, a healthcare name. Buy zone is moving up just a tad to that lower weekly edge at 96 and a half, right? And targeting on the way up 103 to 105 and then 109 to 111. NEM, Newmont Mining, this is another gold miners and metals and mining name. Again, if I'm in too many gold related or metals and mining, I don't like to do that, but whichever one sets up first and looks the best risk to reward, that's the one I'll take. The buy zone 90.41 to 87.17, playing it back up to 100, 105, and basically 110. Nvidia's buy zone, it's almost right at it. So it's 174 to 164. My targets for Nvidia would be 185, 195, and 205. Pan American Silver. Silver's been on fire, and PAAS is my buy zone down here at 44 and a half to 42 and a half, targeting 51.24, 54, 57, and 60. PACS buy zone 31.12 to 26.37. This 35.32 is a target, 39.80 and 43.92. Rocket Lab. Rocket Lab is in resistance, not where I want to go long from. But I am interested in going long at 51.07 to 44.82, targeting 60.29, or that's the upper monthly edge. So 60.29, 60, 65, then 68 and 74. Schlumberger, this would be a longer dated out to February, March, but my buy zone is down here 38.35 to 37.73, targeting 40 and a half, 41.62, and 44 and a half. SoFi is a name that I am currently in, not fully allocated. Will look to fully allocate here at the lower weekly edge for this week because it's just if I get the opportunity. This is creating the inside and up candlestick structure I'm looking for. But trims at 28, 29, and 30 on SoFi would add to full allocation at the lower weekly edge down here. And then Steel Dynamics, another name that I would like a dip buy on. That is going to be at 166.12, where I have a beautiful inside and up candlestick structure. Stop 163.20. Targets 173, 176, 180, 184. And then XME, another sector that overall all of the names inside of it look great. So rather than trading individual names, I could trade just the sector itself. If I were to do that, my dip buys on XME would be 99.24 to 95.45. I'm targeting 104, 105 up here, and then 106.61 by 111.09. So those are the charts that I'll be watching. I have my alerts in. I like to wait for confirmation in a buy zone. If you don't understand how I do that, I do have a video on my YouTube about waiting for confirmation in a buy zone. You could check out that video to learn more in depth of how I wait for confirmation. But anyway, thanks for joining me. If you're not subscribed to the channel, hit the subscribe button. If you haven't hit the like button yet, take a couple seconds before you hop off and hit the like button. I really would appreciate it. And if you're not a member in the Trendy Trading Room or SPX Room at Simpler Trading, there is a link in the description that you can join us, hang out. We have the absolute best community of traders. Trendy Jon and I trade live Monday through Fridays. We educate all day long, and we push out some pretty good trade alerts. So I invite you to join us. Check us out and just see if we can help you in your trading journey. All right, y'all have an awesome weekend. And those of you in the Trendy and SPX room, I will see you bright and early Monday morning, an hour and a half before the bell, where we will put together our intraday blueprint trading plan. All right, y'all have an awesome day.